Good morning and welcome to this page. I am James Ohime, a degree holder in Bachelor of Business Administration Accounting option, account clerk for the Mingus Enterprise with 3 years working experience and 1 year working experience as a tax officer. I have two businesses in Ghana, namely Ohime James Enterprise and Bimbo Travel and Tour with 8 years working experience in the field of management. I will be your instructor to take you through principles of accounting and financial accounting as the main course of studies. I have outlined this course into 5 main sessions, and it takes 5 to 6 hours to complete this course. Some sessions has its own case studies. I have set questions, exercises, diagrams, and examples for you to understand the whole process. Some At the end of this course, you will be able to know something about financial accounting and have the practical knowledge in the following areas: meaning and functions of accounting, accounting cycle, accounting principles, accounting equation, types of accounting, rules of debit and credit, analyzing transaction, recording transaction, posting transaction to the general ledger, balancing the account, preparing trial balance, income statement, balance sheet, cash flow statement, accounting ratio, various types of accounting ratio, significance of this ratio, basic of inventory, inventory accounting system, inventory variation, accounting for inventory, impact of inventory on the financial statement, definition of taxation, types of taxation and how they are calculated, and explanation are made for some basic tax components. You will be able to have my WhatsApp number and my email address to ask questions that may arise. I have also created a free 2 hours online classes for we all to meet and answer questions based on this course. Also, I have added a PDF note that will assist you alongside with the video presentation. It will assist you in your quiet time to read through those notes to understand the whole course better. Please register this course and join me to have value for your money. I'll be waiting for you, and I am 100% willing to support you to understand anything concerning financial accounting or principles of accounting. With my year of experience, I will be able to help you come out with flying colors. Thank you, and I'll be waiting for you there. As I have explained in my introduction, I always set up case studies. So let us all solve this case study on the screen to understand the overall knowledge of what we are going to learn in this course. This case study comprises of the accounting ratio and how a business account is being recorded or calculated. We are going to learn so that it will help you to understand what we are about to learn and the knowledge we are about to acquire throughout this whole course. You can have a basic understanding from the case study, but remember, if you join the class, you have the overall understanding, of which I have grouped the course into 5 main sessions. Each session contains one lecture. So I have taken my time to break down the lectures for you to understand each of the concepts. I have also given you advantages to reach me in case you don't understand anything. Let's start with this case study so that you have a fair idea about what you are about to learn. So in my case study entitled Bimbo Company Limited, Bimbo Company is a manufacturing firm that produces and sells solar lights. The company has been in operation for several years and is currently preparing its financial statement for the year ended December 31st, 2022. The following information is available. Inventory, that is the inventory of the company at the end of 31st December 2022. As of December 31st, 2022, Bimbo Company has $200,000 worth of inventory on hand. This include raw materials, work in progress, and finished goods. So the figure $200,000 worth of inventory include the raw material of the company, the work in progress of the company, and then the finished goods of the company to bear in mind, and the amount is $200,000. Account receivables. Account receivables simply means that those people who were owing the company during that financial year. So the account receivable, the company recorded $150,000 in account receivables as of December 31st, 2022. This represents the amount owed to the company by its customers for sales made on credit. That is what I've explained to you. Account receivables are the debtors of the company. So those who were owing the company at the end of the year was 150,000 worth of goods that we've sold those goods to them on credit base as at December 31st, 2022. Those goods has been with the customers. During the accounting year, they came to us and buy goods on credit from us. But as the revenue principle implies, once goods are being reached at are being reached at the destination of the customer, it means that sales has been made, even though they've not made payment, but they've collected goods worth of $150,000. It means that sales has been made. This side will be explained deeper when we assess the cost. Let's continue. Account payable. Bimbo Company has $100,000 in account payable as of December 31st, 2022. This represents the amount owned by the company to its suppliers for purchasing made on credit. The account payable also represents the part of goods we borrow on credit, or we collected it on credit from our suppliers during the financial year of 2022. Sorry, let me come again. Account payable, they are the owings that the company is owing its supplier. This means that in the year 2022, we borrowed $100,000 worth of goods from our suppliers. That is the implication. Let's continue. So, point 4, prepaid expense. The company prepaid $20,000 for insurance coverage for the upcoming year, starting from January 1st, 2023. When we say prepaid, it means that we've made advance payments. So the company made advance payment to the insurance company. An amount was $20,000 for the year 2023, but it has been made in the year 2022. Okay. Accrued expenses. Bimbo Company had $10,000 in accrued expenses as of December 31st, 2022. These expenses relate to salaries owed to employees for the month of December 2022. Accrued expenses means that we are owing our customers, we are owing our employers, meaning that during the year December 2022 31st, we have not paid our supplier, our employees, those we have employed them to work on our behalf has not yet been paid. So those payments that we're supposed to pay are called the accrued expenses. When we come to fixed assets, the company owns a machinery and equipment with a net book value of $300,000 as of December 31st, 2022. The fixed assets that the company has bought but has not yet finished paying, the accrued in the fixed assets, we have a owing of a certain amount, because this money cannot be included in our financial statement as expense, because the profit of the we do so, the profit of the company will ascertain a net loss. That is why we need to represent it in the balance sheet and work depreciation on it. So when we work depreciation on it, the value, the net book value, the total amount that the company is supposed to pay in terms of machinery and equipment is $300,000. And as at December 31st, 2022, this money has not been paid. That is the whole explanation of our course. Then let us break it down. So we are supposed to calculate the current ratio for Bimbo company based on the given information. Let's go back to the information so that we understand the whole thing again before we do the calculation. I am doing this for you to understand. When I read back to the information or the case study, you get the whole concept. The case study is saying that Bimbo Company is a manufacturing firm that produce and sell solar light. The company has been in operation for several years and is currently preparing its financial statement for the year ended December 31st, 2022. The following information is available. It means that Bimbo Company is manufacturing solar light, and in the course of manufacturing the solar light, they have been operating for several years. But this current year, that is last year, 31st December 2022, the following information were given by the company. It means the company has recorded this transaction and it is there. So we are going to know the transactions and know how we can calculate for the question or the demands of the question. So he says that inventory, I have explained to you earlier on that inventory simply means the stock that we are operating business with. So he's saying that the inventory as of December 31st, 2022, Bimbo Company had $200,000 worth of inventory on hand. It means that at the end of the year, the inventory that the company was having in its possession was $200,000. Put that one at the back of your mind because we are going to use it to prepare to give the solution to the questions that has been asked. This include the raw material. It means that the 200,000 worth of inventory include raw materials, work in progress, and finished goods. So the 200,000 worth of inventory include both the raw material, the work in progress, and the finished goods, but it is the closing balance of the stock we have in our warehouse. Let's go to point 2, account receivables. I have also explained to you that account receivables are our debtors. Debtors simply means that people who own the company. And the statement read this way: the company recorded $150,000 in accounts receivable as of December 31st, 2022. This represents the account owned to the company by its customers for sales made on credit. You see, it means that this $150,000 are people who are owing the company at the end of 31st December 2022. Let us proceed. Account payables. When we say account payables, they are the people we, the company, are owing them, especially our suppliers. When we bought goods on credit from our suppliers and we did not pay cash, it means that we are owing our suppliers. That name for the owing to our suppliers is known as account payable. Therefore, Bimbo Company has $100,000 in account payable as of December 31st, 2022. This represents the amount owned by the company to its suppliers for purchases made on credit. As I have explained, when we bought goods on credit from our suppliers, we did not pay physical cash. And for that matter, we are owing our suppliers. The name given to the money we are owing our suppliers, in accounting, we call it account payable. Let's proceed. So, point 4, prepaid expense. When we say prepaid expense, it means that we have some expenses to incur, but we have made payment before the service is being rendered to the company. Prepayment simply means that we make payment for a particular expenses which we have not received its services. That is the meaning of prepayment. The company prepaid $20,000 for insurance coverage for the upcoming year starting from January 1st, 2023. It means that the company has made prepayment for insurance coverage for 2023, which costs us $20,000. Let's continue. 5. Accrued expense, meaning that accrued expense means that expenses that we have to settle, but it has not yet been settled. Accrued expenses simply means that expenses that we have to settle, but it has not yet been settled. This is called the accrued expenses. Bimbo Company had $10,000 in accrued expense as of December 31st, 2022. This expense relate to salaries owed to employees for the month of December 2022. These accrued expenses are expenses that were incurred by the company through those who were working for the company. The company was not able to pay them their money during that financial year, and out as December 31st, the money was still with the company. When it comes in that manner, we record that one as accrued expense when we are preparing our financial statement. We have fixed assets. The company owned machinery and equipment with a net book value of $300,000 as of December 31st, 2022. When we say fixed assets are goods that cannot be converted into cash within one accounting year. So the company has bought fixed assets, and because the money involved is $300,000, the company cannot treat this assets as immaterial, and for that matter, it should have a net book value, and that net book value of that fixed assets is $300,000. Now, let us move to the question. The question is saying that we should calculate our current ratio for Bimbo Company based on the given information. To calculate your current ratio, it means that you need to know your current assets and you need also to know your current liability. So what is the current assets of the company? I have listed them down. So let's go back into the question and see if we can find our current assets before we go to the solution. So let's see. Inventory is a current asset. Why? Because at the end of the year, we were having our inventory of $200,000 worth of inventory in our hand. It means that the stock that were supposed to be sold within that financial year were not able to be sold. This $200,000 were still in the warehouse. It has not been sold. When that happened, it is a current asset to the company because we can sell stock within one financial accounting year. So let's remember, now we have inventory. Inventory is part of our current assets. Let's identify another current assets. On the question, we can see account receivable, that is debtors. It means that during that financial year, we have the inventory to collect our money from our debtors. Debtors has bought the goods and the goods has already been converted to cash, despite the fact that the cash has not yet been paid to the company. So account receivable is also a current assets. So we have two current assets here, inventory and account receivable. Let's see, account payable. What is account payable? Account payable too will become our current liability. Now we have inventory, account receivables as a current asset and account payable as a current liability. So remember, we have two current assets and one account payable as current liability, and the figure of that one was 100,000. I think you are cooperating with me. Prepaid expense. What is prepaid expense? Is it a liability or an asset? For your information, prepaid expense is a current liability, a current asset. A current asset. Why? Because the money has been paid, but services has not been rendered. It means that that money is still for the business. When we come to accrued expenses, it's a current liability because it is expense at all costs we are going to pay off, and we are going to pay off because the services has already been rendered. Then the last one is a fixed asset. So let's go to the solution. In the solution, question 1, we want to know the current ratio of this statement given to us, or this transaction that has been provided for us. So our current ratio is equal to the current is calculated by, knowing the current ratio, you need to calculate it by current assets divided by current liability. What are our current assets? We have inventory, we have account receivable, and we have prepaid expense. So the figure for account inventory was, uh, sorry, the figure for inventory was $200,000 plus accounts receivable, that was $20,000 plus, no, sorry, the account receivable was $150,000. So we have inventory $200,000, account receivable $150,000, prepaid expense $20,000. When we add $200,000 plus $150,000 plus $20,000, we will get $370,000. Let's go back to the question and be assured that the inventory, the account receivable or account payable is the exact figure that we have recorded. So let's go and cross check. So let's cross check inventory. The inventory is $200,000 worth of goods. We come to account receivables, and account receivables too is 150,000 worth of goods. So 200,000 plus 150,000 worth of goods. Then we move on to our prepaid expense, which is $10,000. So if you add $200,000 plus $150,000 plus $10,000, our solution, we will have, sorry, let's go back to the question. Prepaid expense is $20,000, not $10,000. The accrued expense is $10,000, but the prepaid expense is $20,000. So $20,000 plus $200,000 plus $150,000. Good. Then we will have our $370,000. So we added the inventory figure $200,000 plus our account receivable figure $150,000 plus our prepaid expense, which is $20,000, and we arrive at $370,000. So now it says it is current assets divided by current liability. Let's go back to the question and cross-check the current liability we have. So from here we have accrued expenses and the amount is $10,000. Let's go back to the other question and see. The other question too, we have account payables, of which I have explained to you that account payable is also a current asset. Therefore, that we have $100,000. Therefore, $100,000 plus $10,000 will give us $110,000. So we come back to the solution. We know account payable plus accrued expenses, $100,000 plus $10,000, which is equal to $110,000. Now we have our current assets and our current liability. The equation is saying that we should divide current assets because we want to know the ratio. So we should divide current assets by current liability. So the current ratio is equal to current assets divided by current liability. $370,000 divided by $110,000, which will give us 3.362. That is the ratio. So the ratio of our account, we have 3.362%. That is the ratio of the first question asked, and that is the answer provided. Let's proceed. Let's move back to the question. The question is saying we should determine the total assets for Bimbo Company Limited. Knowing the total assets for Bimbo Company Limited, total assets is equal to current assets plus non-current assets or fixed assets. So let's know the fixed assets value. The fixed assets value is 300,000. Our current assets value, we have $20,000 plus current assets, account receivables, that is $150,000 plus our inventory, which is $200,000. Therefore, our total assets, that is the total assets. Total assets include fixed assets and current assets. Total assets of the company will be equal to fixed assets plus current assets, which is equal to the fixed assets was $300,000, and the current assets, we sum them up and we arrive at $370,000. Let's go back for you to see. So this is where we sum up our current assets, the inventory plus the account receivable plus prepayment, prepaid expenses. That is 200,000 plus 150,000 plus 20,000. When you sum this together, you get $370,000. So $370,000 plus our $300,000. That is the fixed assets. We had $670,000. Let's proceed to the third question. So it means that we have been able to calculate for or determine our total assets for Bimbo Company Limited. So the third question is, what is the working capital for Bimbo Company? So now we want to determine the working capital. Now we know the assets, we know the liabilities, we know our current assets, we know our fixed assets. So let us know the capital. The capital, the working capital of the company is the current assets minus current liability. So it means that if you want to know your working capital of the company, you need to know all your current assets and that you deduct the current liability from your current assets. You need to know the money that the current assets will sum up to, and you need to know the cost of our liability. So when you have the total current assets and we deduct the total current liability from the total current assets, we will arrive at our working capital. So working capital is ascertained when current liability is deducted from current assets. So now we were having our current assets, a total of 370,000, minus our current liability, $110,000. When we deduct $110,000 from $370,000, we are getting $260,000. Therefore, this is the answer for the questions that were asked. I have cited this answer. Take my time, go over and over for you to understand, because the concept or the course covers all this part with word explanation for you to understand anything that you need to understand as a financial accountant and also as a student, so that you get a fair idea of this, and based on this you can determine your working capital, you can determine your total assets, you can know how to implement this knowledge into your business and also make informed decisions about the course. We will go deeper for you to understand some basis, some concept has been explained, well explained for you to understand. Let me go take you back, flash through the solution, therefore you get the deeper understanding. That is how I'm going to teach my course. I will explain over and over for you to understand. If you don't understand anything, you have the privilege to WhatsApp me and ask me questions on what you don't understand. So we are going back to the question. The first question we're saying that we should calculate our current ratio for Bimbo Company Limited based on the given information. And based on the given information, we were able to identify our current assets, because when we want to calculate the current ratio, it is current assets divided by current liability, and we were able to identify our current assets, one, knowing the inventory and the worth of inventory we have in the company, that is $200,000 worth of goods. We were able also to define or to analyze another current assets, which is account receivable, and the account receivable was recorded a balance of $150,000. We were also able to know our account payable, because we were about to work for the current ratio. And the current ratio simply means that you need to divide your current assets, your total current assets, by your total current liability. So we were able to know our liability, one of our liability, that is account payable, which was $100,000. Moreover, we were able to know another current asset, that is prepaid expense, which worth $20,000. So we combined the three current assets together, which is the inventory plus the account receivable plus account payable plus the prepaid expense. That is 200,000 plus 150,000 plus $20,000 equal to $370,000. From that side, we were able to identify our total assets, current assets. Then we came to the current liability, whereby in the question we were able to identify account payables and accrued expenses. And the account payables was 100,000 plus an accrued expenses of 10,000. So if you add the account payable plus the accrued expenses, we arrive at 110,000. And at the end, to determine the current ratio, we divided the current assets by our current liability and we arrive at 3.6362. That was the ratio for the question asked. The second question also demands we should determine the total assets for the company. And we explained that to determine the total assets of the company, we need to know the current assets the company is holding and the fixed assets, because fixed assets plus the current assets will give you a total assets of a company. So what was the fixed assets? That was 300,000 and our total current assets was 370,000. We sum the two together and arrive at 670,000. That was our total assets. So the question also demands that we should know that we should calculate for our working capital. And to calculate for the working capital, you need to subtract current liability from our current assets. What was the current liability? We were able to find out that our current liability was $370,000 and current our current assets, sorry, was $370,000 and our current liability was $110,000. So if you deduct $110,000 from $170,000, you arrive at $260,000. This will give you a fair idea about what we are going to learn. I'm waiting for you. Just join the class. You will enjoy it and you will have the chance to ask me any question that you don't understand. I love you all.